Insurance, everyone's favorite topic. I say that seriously because I used to hate insurance, but when you have to pay out a ton of money just to get your business off the ground, you kind of start getting excited about ways you can save 50 to 70%. And that's what we've been working on quite diligently at Joyride with some of our partners over the last few years, because one thing I've learned, if anything's old world, it is the insurance industry, and they do not like to change. But we're starting to get there, and we're starting to do it through data. It's kind of a buzzword these days, but big data really is the key for everything. All right, so why is insurance important? We're going to talk about two forms of insurance, general liability and property damage. And the reason they're important because it's mandated for most public sharing to have a general liability policy. You can't operate without one. You can't get by without one because you have to prove that you actually have it to city officials. And if you are worried about vandalism, theft, or really losing your fleet in any capacity, you kind of want to have some commercial property damage insurance in there so that you can recoup costs if they are taken from you off the streets, literally. So, general liability, why is it important? Well, some cities have very large premiums like Los Angeles, which kind of set the standard for the world at $10 million general liability. No one can afford that because the premiums associated with that, regardless of fleet size, are in the seven-figure range. You're obviously not going to start a business of any sort if over 60% of your margin is spent paying your insurance on day one. Check that, T-10 before you even launched. Doesn't make any sense. Honestly, it'd be kind of stupid to try that. So don't do that. Don't go for high insurance premiums. They're worthless. Chicago's another quite high one. There's, a lot of people in the press saw that. I think it was Lime and Spin had gotten that back in the day. They've gone through a couple iterations. What they didn't tell you is that over 20 companies decided not to even apply for the Chicago tender, or as they call it in the States, an RFP, just because the insurance was so high. It made no sense to even apply. And these are multinational companies with 9 figures in investments. Didn't even want to apply to Chicago. So it has a major impact on operators, big and small, their ability to look at. So the Chicagos and Los Angeleses of the world, even the Londons, the Parises, and any MSA that has a really proper regulatory environment, it's really only going to be the tiers, the dots, the voids, the limes, the birds that are able to afford the insurance policies or be willing to lose money for the short term and wait out trying to change the regulations. So the other industry standard right now that we see is a $2 million general liability policy, or £2 million, €2 million, you pick the currency. And this is something that's somewhat affordable. Now, it carries a minimum vehicle. 1 to 200 is going to be the same cost. It should have actually gone up linearly, but again, insurance is kind of old school. And so you will pay the same amount for a fleet of 200 under that policy as you would for a fleet of 5. And depending on your scheme, could cost you upwards of $100,000, euros or pounds. Again, not very correlating to successful business enterprise. Some companies can make it work. A number of our customers over the last 3 to 5 years have had to bite the bullet on this one just to get through. And it's just a reality. But we're starting to see some changes where insurance companies are starting to properly risk rate what should be, a large MSA like in Amsterdam. Really shouldn't, in my opinion, have anything more than $1 million general liability policy, because that's really what you're going to see at a maximum claim coming in. So the insurance companies really don't pay out that much yet. So $1 million is really sufficient. We're starting to move the needle on getting that from a regulatory environment, but we're not there yet. For a small metro area, something say under $500,000 or under maybe $250,000 residents, you really only need about $500,000 of insurance, which should only equate to about a $15,000 to $20,000, still quite high, dollar general liability policy. So this is how we're going to get the system, or what we're going to get to in the future through big data. So again, if you were having these exorbitant costs when you just start out, and you don't have traction with your users yet, so you're still trying to grow your rides per day, you're trying to grow your overall user base, your unit economics are going to look almost underwater. Your insurance per ride could look like $2. Right now, the average revenue is $4.50, $5, depending on the country you're in. A couple years ago, it was only about $2.75. So your margins were extremely tight just for insurance. So even today, it could be upwards of 40 or 50% in your year one. So you really, harking back to what I said earlier, maybe a 3% net margin. This is one of the major reasons why. But as you start to scale, if you can get more rides, your insurance, even at that stagnant rate for your premium every year, can drop to maybe 77 cents or even lower. And again, most of this is for public sharing, kind of a different story for private sharing. We're going to get into that a little later. So what are the major risk factors that insurance companies look at? Obviously, if it's a car insurer, it's one driver. They know you. They know how good or bad of a driver you are. They can properly risk rate you and give you an appropriate policy. Plus, they've got 100 years of data to kind of back up their assumptions. These are public sharing fleets. They don't know if I or someone else are riding one of these vehicles at any given moment. And so there's just the assumption that the weakest link or the lowest common denominator is going to be the rider on that vehicle. So they have to assume the most risk per ride in a public sharing scheme. And you would think that you could write this out in your terms and conditions, which you do. Every time you download an app like Voy or Tier, you check that first box on the screen, which basically signs your life away in case you die. You can't sue anyone. But when is signing something or clicking a box on a terms and conditions ever stopped that one person from suing? And even though that will get beat down in court, who gets to get involved? Lawyers. Who's a lawyer in here? Anyone? Good. Like it. But if you were, you'd be getting paid every time someone fell off because you get to bill by the hour. And so that's where insurance really goes to. It's that billable hours for lawyers that happens regardless, and that you have to beat down the claims that are frivolous, but they still have to pay those lawyers. And that's where all your premiums go to for insurers currently, because there haven't been that many class action lawsuits that have actually been adjudicated. Next one, infrastructure. Obviously, roads are not treated the same worldwide. You have, as I mentioned earlier, cobblestones or bricks. You have potholes here or there. You have different types of pavement on the sidewalks, the streets. And the fact that it's still all dedicated, except for Amsterdam, I will say, we are in the one city. Check that, Copenhagen as well. We're in one of two cities that is purely dedicated to biking. The rest of the world's not like that. Cars still have the right-of-way. Most infrastructure, whether it's highways, the Autobahn, just your thoroughfares and neighborhoods, are all dedicated to cars and not to e-bikes and to scooters. And where municipalities have actually started to incorporate more micromobility friendly infrastructure, that sort of just means a painted line or strip down the road, which who feels comfortable getting in a painted strip still next to a car whizzing by at 50 kilometers an hour. So insurance companies know that that is a risk, and that if you actually still get hit by attempting this, that there could be a claim because of negligence. And then the big thing with data, as I mentioned, auto insurers know what you are. They have data on you. They've started giving you actual reading devices that you can plug into your car for the last 15 years. They know how fast you brake. They know how fast you accelerate. They know your tendencies. Right now, we have a bunch of vehicles that are connected via IoTs to the whole world. We know what's happening every few seconds, and yet the insurers are completely blind. There has never been a true plug-in with an API that shows them proper risk rating of users, let alone whole fleets. And that's what we're really trying to move towards. And this is something that the insurance companies have been, let's just say, reticent to actually try to involve themselves with and actually do the underwriting and the diligence on policies based on fleet size data coming out of micromobility share. So a couple of things they kind of look at, and these are things you might have seen if you've been part of a tender or RFP proposal in the past or aspire to be one. You'll see features that are clearly identified as must-haves, and some of these are driven by the insurance regulators of these must be in there, otherwise we won't insure you. So a couple of things you might see downstairs is helmets actually baked into these devices, lock-to cables, which are actual secondary cables, so you can lock it to a pole or a bike rack. The big four, though, that kind of really drive the market right now, those lock-to devices that for some reason cities think will keep everything off pedestrian avenues on sidewalks, hit or miss, we'll say. Geofence zones, which is the backbone of shared micromobility, being able to properly control the throttle of e-scooters and control going into certain avenues, or slowing it or modulating the speed going into what we call slow speed zones. My favorite, no ride zones, aka parking garages, parking decks, because you can't find anything from an operator's perspective. These are your lifelines, and they're really considered the lifelines from insurance companies. So these are major drivers. If you don't have a software that can modulate speeds via a geofence, you can't get insurance. Docking stations, as Mark Antoine mentioned, some cities actually view this as mandatory. They have to have docking stations. Some insurers actually view a public sharing operator with a fully docked system as less risky than dockless, and they will give you 50 to 60% premium reductions just by having that. Trade-off is you spend that savings on buying the docking station, so give and take. I'm going to hand it off to my associate, Ben Wedge, who I mentioned about an hour ago. He's going to walk through some of these key features, especially how they work with the Joyride software.
All right, thanks, Andrew. So Andrew mentioned how these features can help you regulate your insurance premiums and keep your riders safer, keep the cities happy. So one of the big ones that we use at Joyride is geofence zones. He mentioned parking garages as a place where you might want to have a no-ride area, so you can set those up pretty quickly in your map. We have examples of military bases, national parks, all different types of places where you don't want riders to go. Same with Amsterdam. You might have gone through some pedestrian-only streets where they want it to be shopping-oriented and you need to walk that bike or that scooter. You can set that up in your app. You can see it in your operator app, and then the rider also sees it in the client app. So that's the way to really quickly set it up. You can set them up on the fly. We've had operators literally on the phone. There's a problem. They're seeing the bike go down the trip, and then put the geofence zone here. Bike enters it in real time, motor turns off. So great way to even stop one-on-one a bad rider that you know is out there and you can't reach, and because it's due to some other reason they can't shut down the vehicle, put it in a geofence zone right in front of them. Great solution. Next one is ID verification. So lowering insurance premiums by ensuring that your riders are of legal riding age. Some places it's 16 or 18. It also gives you a piece of ID that you can validate automatically in real time. We have a service that takes a few seconds. You scan the piece of ID, it returns that it's valid. The other thing it does is check that there's no account with that name already. So one person cannot set up multiple accounts and get around some of our protective features and start even gaming your freebies. If you have a free promo for the first ride and you have ID verification, they can't sign up 10 different accounts with 10 fake email addresses and ride for free all week. The next one that we use is mandatory parking. So docked stations are expensive, as Andrew mentioned. The way to get around that and keep the sidewalks nice and clear is to use a mandatory parking area. And you can paint some strips on the ground that kind of look proper, help guide the user, but then you use the GPS on the vehicle as well as the end ride photo to ensure that they are putting the vehicles in those spots in a nice way that's out of the straight line that a pedestrian is going to follow as they go down the street. This also helps with your rebalancing operations. Insurance is expensive, but sending someone around in a van to find those vehicles is going to really mess with your economics. So putting these mandatory parking zones in key areas where it's easy to get the vans to, easy to swap the batteries, and easy to pick the scooters up, that's going to keep your costs under control. And then the final thing here is a reaction time test. So we know that late at night, people are leaving the bars, they see the scooters outside, they want to hop on, go for a ride. They might have enough trouble walking, let alone operating a vehicle at 25 kilometers an hour. So we have a reaction time test that you can turn on based on time of day, prove to the city, prove to your insurance operators that you have run a test to ensure there's enough cognitive function to get out there and ride in a straight line. So that will block access to vehicles if they're not ready to go. It only takes about 15 seconds. So it's a nice quick in-app game that helps regulate this. So that's it for me for now. I'm not sure if Andrew wants me to ask this question, but there's another poll up here about insurance, asking how it's altering your business plans and affecting your ability to launch in additional cities. So I'll hand it back to Andrew now. Thanks.
Oh yeah, there you go. Way to go. He'll be back. Don't worry. Ben's coming back. So it doesn't have to be this business. How has insurance actually affected you? So put your mindset in an operator or your former business. see what's going on out there. I know if I was to start a new sharing operator, I have two answers to this, but I'm curious to see what everyone else is thinking. Okay, well, a lot of people would actually still launch a business even with these impediments we've been talking about. All right, we got some entrepreneurs in the house. I like it. Okay, moving on. So, even though we're thinking about this from an operator perspective and that we want our businesses to continue, nothing really functions if our consumers are not being able to ride for any kind of injury or death risk. So rider safety is a top priority, or it should be. So keep that in mind. Your consumers are riding what could be dangerous objects. Keep them safe. So we need to have reactive measures to kind of keep that ahead of time because, as we all know, people will do what people want to do. So we have to take that into account and try to circumvent that. So some of you have probably seen some studies. I discount most of the ones from 2019 because I have a bias towards, I know how some of those were conducted, especially in the United States, with a lot of, let's say, partiality. But there have been some very good studies over the last 2 years that have really taken a global approach to sharing operations and really what's caused a lot of the incidents. The biggest one, no helmet. I have been to Amsterdam twice now. I have yet to see a single person wear a helmet while riding a bike. I've also never seen an accident. Don't really see that necessarily the same when you're in different parts of the country. So this is one of the big reasons why a lot of cities actually require helmets, why insurers require helmets. Because at the very worst, if someone says you have to wear a helmet and you did and you still got injured, at least to our knowledge, that's about the most preventative measure someone can do while riding a scooter or a bike. So these are the data points that actually influence a lot of the actual actions and mandates by cities and insurers. This is kind of interesting that you see really almost the exact same percentages by bicycle and scooter. We found this pretty interesting that there's really no difference. A lot of people think that e-bikes are safer than scooters. Scooters typically have a slightly higher insurance rating than e-bikes. Really, they're about the same. It's two wheels, it's people balancing on them, riding around. So if you ever really want to talk to an insurer when they're trying to quote you much higher for scooters versus e-bikes, just bring up some data like this. It's pretty simple. Okay. So I mentioned off the top that data sharing is going to kind of change this. Let's dive in a little bit. I want to bring up one of our kind of partners here. We got some friends from over in Liverpool. We got the Flare. Some of you might know them as Busby, but they rebranded recently. So I'm going to bring up their CTO, Kirk, who's going to talk through a little bit about some behind-the-scenes data when it comes to saving some lives. So hand off the mic.
Testing. Yep, you can hear me. So, hi everyone. That's the end. Cheers. Thanks. Thanks Andrew for the introduction. I'm from Flare, and we're basically in the business of saving lives. And what was interesting for us is it all started out as being quite reactive, like you mentioned. Safety does. Generally, you don't need it until you've experienced that problem before. And it was one of our directors that actually had that problem. He was run over by a van. He's okay now. But basically what we found was when we started this journey, we knew that the data would have value. We didn't know what that value would be. We didn't know how insurers would react to that data. We had some sort of best theories around what it could do. Hopefully it would make it cheaper. Hopefully it means that we can reward people for behaving in certain ways. And what we were able to find is that actually after year one data, and we didn't start with mobility at all, it's sort of a organic growth for us, we started protecting food couriers. So our large case study is Deliveroo. We protect their global fleet. So anytime you're ordering food off Deliveroo, you're actually an indirect customer of ours because we're ensuring that any real-time incidents, any reported hazards, any potholes, anything that can affect your journey from A to B is logged and is shown at the right time to those users. And that, if you do want to see some of this information, what we can see is things like the incidents around the world. These are real, these aren't mock-ups, so I actually just screenshot this last week and sent it over. But you can see it's 129 countries, it's a global issue. What we're able to do then is actually show that data to insurers and say, this is the risk rating of your entire fleet. These are how many incidents you have per kilometre of operation. These are the types of users in Germany versus the UK or whatever it may be. And it's really interesting to start looking at that data. and how that can really sort of help you to understand the risk that you may have around your fleets. So we started out as an app, which if we'd stay that way, I wouldn't be stood here today. As we said, safety is for everyone. And more importantly, we very quickly learned that if you ask anyone to do anything additional in their user workflow, and you'll find this in onboarding especially, you can lose up to 33% of people per step. So your steps are really interesting in terms of how you bring them into the ecosystem. I'm sure you found this as well. So we evolved, and that's why we're stood here as a partner today, because these safety services can be seamlessly integrated into your user experience via the SDK, the API, or the Joyride Marketplace. And what that really means is there is some really interesting stats behind there. I'll try and remember them. But basically, after a full year of data, we found that flare riders are, you have 1 incident per 5,000 active riders, versus non-flare riders, I think it's 2.4%, at 2.4 incidents per 5,000 riders. So basically, we're able to go with the data back to the insurers to say, we're actually almost twice as less likely to have an incident if you're using flare. And they can't argue with the facts. That's the best thing about it. So we had a sort of inkling around this, and we said, right, well, what are the short, medium, and long-term goals? And we've been able to now secure the largest motorcycle comparison site in the UK, and they will actually, just the same way you tick thatch cam immobilizer, I wear this sort of thing, I've got advanced driver training. Well, if you tick, we're using flare, you actually get a discount. And that's fully funded by the insurer. So that was a massive thing, because it was something we've been working for a long time. And then finally, it's been busy conference season. In the last 3 weeks, we also launched our driver proximity alerting. So in the UK, we have these major problems with left-hand turns, because we drive on the wrong side of the road to everyone else. Obviously, over here, it would be the right-hand side. But basically, we also launched the driver proximity alerting. And what that does is, without beacons, without cameras, without any additional hardware whatsoever, so just baked into your existing app, it will warn vehicle drivers that are participating in the road radar network that you're nearby. And that is almost half of all incidents that occur on the UK roads in particular. Basically that result with serious injury or fatality. I suppose all fatalities are serious. But yeah, this is sort of the technology that stops that from happening in almost half of those instances as well. So we're at our day 17 of that, and in a year's time we'll have more data to play that forward with the insurers, which is great. So we are, you probably haven't heard of us directly. If you did hear us as Busby, we're now Flare. We rebranded. We are well known in the industry. You'll probably know quite a few of the people that use us. But just to sort of say that the data is really proving that you really have to challenge the insurers. They are being more innovative. We are certainly seeing that change, but it is slow, especially with certain insurers. But with data like this, you are giving yourself the best chance of going back and saying, we do understand the risk to our fleets, and we have the data to back it up. And you will start to find even the underwriters, or if not, the short term would be the brokers that would be able to help with that, which has been fantastic. So just wanted to share that, and thanks for inviting me up to share that. So.
Thanks, Kirk. So, as Kirk mentioned, it takes tons of data, and it takes a long time. And really, when you're looking at this, it's not negotiating with a broker. It's proving these risk ratings through real-world statistics. And it takes a kind of a village, a number of partnerships. They can't do it unless they're on board the vehicles. We can't do it without their software, and many other partners that kind of plug in and really start tracking these. And we're building this from the ground up. Like, this is something completely novel for the industry, and we're really happy that it's finally coming to fruition. So, really want to revamp this insurance industry, or micromobility is a high-risk industry for insurance. It's very costly. There's very few policy options. Premiums are really just based on a minimum general liability requirement. And there's really no data. Even there is data, but there's nothing that's viewed in the eyes of an insurance carrier or underwriter that gives any validity to this. And the biggest impediment to this is that annual premiums for insurance policies currently, for the most part, have to be paid up front. You can't even amortize that over the course of a year. So how can we actually start to work together and to make this a real success story for the industry and not something that's just this major barrier for success and expansion? And that really just comes down to data, collecting everything, using APIs from multiple different service providers, and building this use case, this story, and being able to prove that in the world. You come to an insurer and you say, here's the data from 200,000 riders. We're talking over 5 million trips over the course of the year. And here's the claims data that you already have. Overlay that. Oh, you didn't have any claims data? Okay. Now, here's all the demographics on the users, anonymized, GDPR compliant, of course, but you can actually see that there's not the high risk ratings that they assume. And you start to build that trust. You get one insurance carrier to buy in. They start issuing policies. They start tracking in real time with an API plugin the claims that come in, and they start to believe your story. And so we finally gotten the traction for that in the industry, and the Joyride API is actually starting to partner with companies like Flare that actually have these very specific safety and user fleet-based data points that are real-time tracking to actually validate that and give the confidence for underwriters and carriers to actually start reducing those premiums or create altogether new policies for clients. So, you get the benefits of sharing by properly rated risk fleets, most of which we're going to say almost exclusively done through Joyride and our partners, and really, again, keep cash flow friendly. If you're paying exorbitant fees to your premiums every year, you're not going to be cash flow friendly for at least 1 month. All right, so with the right partners in planning, you can find any kind of coverage. We've been working with underwriters and carriers, so we have a number of partners in the US, Canada, and Europe. Don't find as many hurdles in parts of Asia. They have a different regulatory environment. But in the Western world, you come to us. We're going to at least point you in the right direction for the innovative partners on the insurance side. And as Kirk mentioned, some of the innovative softwares that can actually further reduce those premiums automatically just by being a part of the system. And with that, again, remind everyone to go check out some of our insurance videos. We've actually got a 3-part series on kind of going from day 1 to kind of year 3 on insurance up on the Academy right now. But with that, I'm going to kind of take a pause. We're going to come back in a few minutes. Again, short break. We're going to talk about supercharging revenue, our fun section, about maximizing your operations. So stretch your legs for a minute. We'll regroup and start in a few.